Good morning, traders. Chris Buss here with your morning look at markets for Tuesday, September 7th. As always, please run your video player at 1.25x. I think you'll be quite pleased with that speed. You won't miss a thing. Let's take a quick look at futures. A lot of red on the board, but just barely so. I'm going to call equities flat. Gold and silver are down markedly. Gold down 1.2%. Nat gas is down about 2%. The Nikkei was up overnight about 0.35%. Yesterday it was up like 1.5%. So those of you that are in the long Japan trade, those were good developments over the weekend. And speaking of the weekend, I hope you guys had a really nice Labor Day, had a chance to push away from the charts a little bit, kind of get refreshed. Now we're starting to get into, fall trading and towards the close of the year. So I'm sure you're aware or have read that September and October can be volatile months. So we got to stay on our toes. There is a Jewish holiday today, so that'll keep quite a number of traders off the desk. So it's going to take a few days to kind of get into the groove of the fall trading season, but I think the worst of the really low liquidity is probably in the rearview mirror. So as more and more people get back to their desk after their summer holiday and getting the kids back to school and stuff like that, I think you'll see volumes pick up. On the macro front, I didn't see anything today of note, but tomorrow, Wednesday, we've got a 10-year bond auction and the beige book. Thursday, there's a 30-year bond auction, and then Friday, we've got a final PPI print. So I think, as we've discovered over the summer, bond rates are gonna play a big role in how things kind of play out this fall. So let's get into it. Here's the dollar. We had a rising channel here. The dollar ran into trouble at this upper resistance level and has since pretty steadily rolled over. You can see here we spent a couple days at the 50. That broke. And then we spent, we got an initial bounce off of the 200 right here at 92.20, and now we're trading below that. So the next level that I have on the chart is 91, just call it 91.75. If that were to break, then, I think there's going to be a faster move down towards this 90.81 level. Why is that important? Because it affects these scenarios that we've been watching throughout the summer, whether we're in a falling dollar, rising yield environment, or the opposite. And for those of you that are new to the channel, thanks for stopping by. But you can kind of see the groups of stocks that do better in each of the scenarios. And also, if you're new and you want to register for all my content, you'll find a link in the show notes. And then here's some little added notes and ways you can get in contact with me and follow my work on social media. But in general, if you sign up and by dropping in your email on the blog or on the website, you'll get all my content. I'll email that to you directly. You won't have to go look for it. So that would be great for you to join us. And then you'll have an opportunity to join our trading room that continues to grow and grow. So here's the yields that I was talking about. We had made a sharp move down, and now we're trying to stabilize, which it appears like we've done. I think the sweet spot for us remains between 1.3% and 1.4%. We're kind of in the lower half of that range. But I think between 1.3 and 1.4%, both of the scenarios can work. A rising rate environment is going to favor cyclicals, banks, reopening trades, that kind of thing, while falling rates favor the bubble stocks, technology, high valuation, EV stocks, that kind of thing, the ARC names. But I think here in the middle, I think both can work. And so just so we don't fall below and head down or rocket higher, I think the speed of those moves is going to have a big difference. So while normally most of us aren't all dialed into the bond market, I think it's going to pay to pay attention to these yields and also follow those auctions that I called out earlier tomorrow and Thursday, because they're going to have a direct impact on these yields that seem to be directly linked to the equity market. Here's TLT, trades inverse to the yield curve. And you can see here we had this little consolidation triangle. We were using this 149.50 as a pivot point. And you can see that on Friday, it wasn't a big move, but we have dropped below the triangle. So now there's an open path down to test the 50 right around, I'm just going to call it 147, and then the 200 down at 146. If you saw yields really start to take off, and you lost the 200 on the TLT, then I think you've got a super clear bearish setup on TLT for a move back down into the low 140s, high 130s area. One of the things I did over the weekend was kind of dig into market internals. Of course, here's the NYSE McClellan oscillator that has treated us so well, identifying overbought and oversold conditions. Here we've got the NYSE oscillator about 22.5. So that's not a big deal. That's not predictive of anything while it's inside the range. I'll continue to monitor this, may not show it every day, but when we get up towards 60, high 50s, early, low 60s, we're going to need to pay attention for what is usually a pullback move from overbought conditions. Here's the NASDAQ oscillator. It's in a little more of a higher position here at around 38. Still, I wouldn't say that's at a worrisome level. I regard that inside the range. But as you know, things can change quickly. You have a big day or two, and then you get up here into the overbought area where you're going to want to start, or at least I'm going to want to start peeling off some risk, anticipating one of these down moves that always seems to happen when you get up here in the 60 area. One of the things I did, and I'll show you this percentage of stocks over the 50 has been climbing pretty nicely here in the last few weeks. Now we're up into 63, whereas just a couple weeks ago we were wrestling with the low 40s. So what does that mean? That means more stocks are participating and making progress in getting above their 50. Now I went through and looked at NASDAQ. I went through and looked at a lot of the advanced decline lines that kind of show us, the level of participation, advancers versus decliners. And actually, there's been a lot of improvement over the last few weeks in those numbers. I think the thing we always hear on FinTwit and financial media or whatever, wherever you look, there's always that outcry that there's no participation and it's really only five FATMAAN or FANG names that are driving the whole market. And while that's true, those names that we track each and every day do have an outsized effect on the indexes. There's a lot of evidence to show that stocks below the surface are starting to act better and not worse. And here's an example of it. This is our equal weighted SPY where, Apple is the same as JP Morgan, for example, where Apple would have an outsized effect on the cap weighted SPY. In this measure, all the stocks are the same. And you can see here, we're at the highs. We're within this rising channel. We're above the 8, 20, 50-day exponential moving averages, and that are bullishly stacked and moving higher. So there's always things to worry about, as we know. Whether it's breadth or interest rates or whatever the case may be. I think when you find yourself getting a little panicky or worried, go back to your first principles. Are we in an uptrend? Where is price related to the moving averages? Is price above the 8 and 20 day, or is it below? Is it within a rising channel, or has it broken down below? And so with this kind of posture, within a rising channel, above all the moving averages, it's hard to get very bearish in that type of scenario. I mean, this is exactly what you want to see. Now, another example of what you wouldn't want to see is if you saw SPY going up every day, but your equal weighted SPY going down every day. That would be an indication that, those top 5 stocks are doing all the work and everything else underneath is rolling over. We don't have that here. So as long as the equal weight is directionally the same as SPY and maintaining itself in this channel above all the moving averages, you have to be bullish. And, like I said, there's always something to worry about. We do have the bearish divergences that have been persisting since back in May, all through the summer. We point them out almost every day. That's cautionary. It's not a sell signal. The sell signal will come when this rolls over and breaks trend and starts losing the moving averages. So here's SPY 2-hour, very much the same discussion. Have the bearish divergences in place, but we're in the top half of this rising channel. One thing I like about this channel is it's not overly steep. We have periods of consolidation. We check down to the bottom of the channel every once in a while. If I went back, you'd find more touches back in time. And these have been, at least to this point, dips to buy. So now we're at the upper half of the rising channel. And, at some point in the future, we will lose support, lose the midpoint, and come down and revisit the bottom of the channel. I mean, that's what price does. Here was a check back to the midpoint where it found support and then moved up, etc. So today, I think you key off of 452. That seems to be a nice pivot area. We've got a large volume over price bar here offering a lot of support. You can see that we've spent the last couple of days of last week just kind of grinding in a narrow range, not having a lot of upward bias. So use 452 today as your pivot. I think bulls are okay above. Down below, we may check down to 451, midpoint of the channel. Looking at the 30-minute chart, you can see the levels a lot more clearly. If we break above 450, all-time highs, you got to buy. If we come back down to 452, that's a location where you can look to buy the little micro dip at support. If we lost 452, I would expect price to come down to 451 and test this little gap that never got filled. And then, of course, right on down the line, 449.50, etc. So pretty nice, clear levels for you there to shoot against. Moving on to the Qs. Got a rising channel. I think today, 382 would be your breakout point for all-time highs, got to buy type level. I think you've got a pivot point at 380 and then some support down towards 378. Here's your 30-minute channel or 30-minute chart. I've dropped in a little channel here with a midpoint line. I don't know if it's going to be all that super duper helpful to you, but I did just drop it in there for kind of a visual reference of the price action over the last couple of weeks. So as I mentioned, I would use this 380.50 kind of an area here as your pivot, and then if it takes out 382, that would be your signal to buy. Remember, taking out overhead levels from below is bullish. And that's always a level that you can buy with a stop just below if you're an active trader. If price runs into trouble and starts rolling over, those are bearish price action. So losing levels from above is bearish, where you can take a tactical short. For instance, if price were to come down today and lose 379, you can see here that there's a void in the price chart. Not a lot of trading has happened. A lot of thin air in here. I think that would be a nice little technical setup for an active trade where you could get short against 379, look for a move to 377, and look for this gap to be potentially filled. And actually, your next big level of volume over price support, you can see right here, is at 375. So that would be my thought process on how to use these levels. Now in here, I don't think looking for a short is all that compelling, because you've got a lot of price action in here, and we're in an uptrend. So while I'm in this zone, I'm looking for a place to buy. For instance, say price came down here to 379. We just looked at the bearish scenario where that failed. 379 to me looks like a place that you could try along. Why? Support, 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 and support here. So there's been quite a few touches of that level from above that have held. So support is support until it isn't. And so you get long here. And then if it fails, you say, hey, something's different. We lost 379. I'm going to flip short. There's where that flexibility in your thinking and in your trading is going to benefit. You're going to benefit from that because you're allowing yourself the freedom to be either bullish or bearish depending on the information flow that you're getting. So that 379 would be an area where I think you've got to keep an open mind for a bounce. But if that bounce doesn't work and it rolls over, then you've got a nice short setup. IWM continues to grind higher. It's lost a lot of the impulsive characteristics that you see towards the low of the range, where you can see here we tested the low of the big range and we got multiple days of explosive moves to the upside, and now you can see the impulsive nature of the move is running out of gas. You kind of see that here in the PPO momentum, how it's flattened out and how RSI is flattened out. All that said, I think the path of least resistance is higher. I still think we can go up here and tag the high end of the range at 233, 234 area. Today, it sets up pretty simple. This, what is it here? See it better here. Yeah, this 228 is a nice pivot level for you to key off of. Above, you can be long and look for a retag of 230. And then if it breaks out, you can move your stops up and shoot for that 233 number. If it kind of rolls over and loses 227, then it's probably coming back to 225 and potentially all the way back to 224. And so just jumping back to the 2-hour chart, this breakout of 224 has been the level that we've been keying off of. And I think as long as 224 holds, whether it comes back here to test again or not, I think you want to have a long bias on IWM as long as it's above 224. Now, if it loses 224, then all bets are off. We just looked at the 30-minute chart, has the levels quite clearly defined, so you can use those today if you're an active trader. Moving on to FATMAAN names. I guess Thursday of last week, Facebook had a bad day at the office, was up here at the highs and came all the way back in here to 375. I think 375, 373, either of those two levels, if you got either of those, would be good places to try a long. What you don't want to see is price move back into this old gap below 373. That would not be very good from a technical standpoint. Remember, when you leave a trading range, you don't want to come back into it after breaking out. That makes all that stuff look fake. And then all these people would, of course, be hitting the sell button because price would tell them that they were wrong. And that's where you get that fast move down once price, if it does, moves back into the range. So, but bigger picture, Facebook's in an uptrend, and I would be looking for long entries, either at 375 or 373, and those would be areas where you could put a tight stop. Apple, pretty simple setup. If it can take out 154.50, and a lot of people have 155 marked, you can see these little tails right here where it tagged 155 and dropped back. But I think a better level is 154.50. If price can take that out and hold it, move into blue sky territory, I think you can and should be long Apple above that level. As long as price stays in here between 154.50 and 152.50, there could be a lot of chop like we saw back in here. You could come down here, actually fill this gap and come down to 150, 125. But like I said, if you got that move, I would be looking for a long rather than trying to get too cute with a short. I think Apple has some tailwinds behind it, as do most of these mega cap names. Tesla flagging here in a trading range between 740 and 725. Remember, I've taken it off the chart, but there was a gap here that has since been filled. And so above 740, the next level is 770. So mark that on your chart. And if you were to get a breakout above 740, it's a good opportunity to go long if you're into actively trading Tesla. Likewise, if you got a pullback into 725, 720, you can see that that's a big line of support where you can get long against 720 and then look for a bounce back to 740. That would be a nice trade in itself. But then what you're really hoping for is to be along for the breakout above 740. Microsoft, been taking its sweet time of late. We got the big impulsive move coming from the 280s, made a really fast move up to 305, and you can see that 305 has been a wall lately where lots of tags, but then price backs off. I think today and in the days going forward, you can see the levels, they're pretty clear. We've got a little open gap here of about $1 that needs to get filled. And actually price could actually come all the way back down to revalidate this level here at 297.50. And if it got down that far, I would be a buyer, but with a tight stop, because there's some open space below that where price could actually come back down in here to 294. But I think the pivot for today is, if you can get a breakout above 302 that it can hold, I think the door will be open to test this 305 again. But we got to see momentum pick up and RSI pick up for that to happen. Amazon in a nice uptrend. You've got a nice base of support here at 34.40. You've got an intermediate line here at 34.71. I think 34.70, 34.71 is your pivot. As long as it stays above that, I think it can find this 3,500, then 35.20, then 35.40. I think those are your overhead targets on Amazon. And I think over time, whether it's sooner or later, we're going to fill this big earnings gap. If you recall, that's where this came from, outlined in purple. That's the gap that needs to be filled. And then, of course, get a breakout from there. I do want to point out for you, this shows, just a little bit of using RSI and PPO to kind of define the regimes that price is in. You can see that all during this time, momentum never broke above the zero line. And anytime momentum is below, it's in the bearish regime. And then when it crosses above the zero line, it's in the bullish regime. And same thing with RSI. RSI never really broke above 50 for, really at all, until it did. And so if you're watching Amazon and you see, RSI is bearish, PPO is bearish, price not doing a whole lot, you'd be saying to yourself, bearish conditions. Do I really want to try, take a big swing at a long when everything is in their bearish regime? But then you notice something different. Momentum breaks above, RSI is in sync, breaking above, and you've got an igniting candle on, from the lows. And even if you didn't pick, even if you weren't like on top of these first 2 or 3 candles, PPO and RSI gave you a good heads up or insight that something was changing with, as both in unison broke above the midpoints of their ranges. And then if you had any kind of a duration position, or if even you're an active trader and you've got bullish momentum and bullish RSI, you want to be leaning bullish and looking for long entries, not looking for short entries as you would over here. It's not always this clean. You'll see whipsaws in your charts on other charts, but I did want to point out to you that's how you can use the RSI and PPO bullish and bearish regimes to help color what kind of trades you want to take in that particular instrument. Google, little corrective action here. You can see that this 2870 is a really nice pivot point for today. I think you can be long above, and just like the other names, unless you're a sharpshooter, I'd be looking for long entries, not particularly looking for short entries. The stock has just been too strong, and I think there's a higher likelihood of getting whipsawed out of a short than than out of a long. So I would treat it that way. So Google looks pretty good. Speaking of something else that looks good is Netflix. I want to show you the daily chart. This was the prior all-time high. When was that? Back in January. And now we're trading right at that level, right about that 590 area. So Netflix has offered some nice trades lately. If you got these explosive moves, you're quite happy. I think today at 590, even though I've got it drawn down here at 584, if you got to move down to 584, I would try a long there. Why? Because it was support back here. So support is support until it isn't. So you try a long there and see if you can get a push up to get a breakout above 595, 560, and then that would be your blue sky country. Now I got one more chart here of our regular stuff, and that's SMH. We're right here at blue sky territory at 273, 274, 275. Remember, we had this nice big $35 wide consolidation range that we've been focused on for a breakout. It was quite frustrating for a while as we had fake breakout after fake breakout, but now this one looks legit. Price is above all the moving averages that are bullishly stacked. It's above the midpoint of the rising channel. That's bullish. I think on SMH, you want to be long above 270 and then look for a push up into the low 280s, where you'd obviously run into the top of the channel and you'd expect a reaction. But just remember, coming out of this range, our target is in the low 290s. So there's still a lot of room just on a measured move basis. Just going back to the 60-minute chart here. So I've got a line here at 274.50. If you want to set an alarm there, that would be great to take it long. We had on Friday a big impulsive candle and then flagging action the rest of the day. So this is a very constructive setup. I think you should have alarm at 274.50 and take that long on a breakout. I've got 5 or 6 names for you here. PayPal, you can alarm 291 for 305, and then with any luck, you would already be long for a potential breakout above 305. But first things first, a break above 291, I think you can be long. Notice the compressed EMAs here, where they are all starting to turn up. The 8-day has broken above the 20 and the 50, and the 20 is just emerging above the 50. Whenever you have these compressed EMA setups, that could portend an explosive move as price emerges higher. So 291, set your alarm there. Palantir is starting to get a lot of interest in the option chain world that I try to keep an eye on. You can see 27 has been a big problem in the past. Rejection, didn't really hit here, but rejected, and now we're back up at 27. I think you get a breakout above 27. I think you got a $6 measured move that could take it up towards 33, 34. And notice again that nice bullishly stacked moving averages right below price. So I'd set an alarm at 27. Steel Dynamics is a name. I think I sent out a trade idea on this a while back. We got this breakout, but it's been a little frustrating here lately as it came back to test the breakout, and now it's back at that level again. I think if you wanted to take a shot, you could be long against 66. You've got the 50 just below, and you've got a trend line coming up through here at the same place. So I think 66 should offer a good bit of support if you wanted a steel name. If you wanted to look at other names, there's Cliffs, CLF. There's, of course, US Steel, X. And then you've got Steel Dynamics. You've got MT that can't even pronounce that name. Symbols MT. Misolor, I guess is its name. Anyhow, that's doing well. So I think there may be an opportunity for those steel stocks to reemerge. Here's DocuSign. It had earnings last week. It's in this range here where 315 has been a little problem. Reject, touch on Friday. I think if you alarm 315 and you get a breakout there, I think you'd have a real nice trade on your hands on a breakout above 315. Notice bullish regime on RSI, and we've got a nice PPO reset where momentum has come out during this consolidation. never lost the zero line, and you get a little breakout here on 315 and get that to turn up, that's a very bullish setup. We've got Unity Software that we flagged last week. I think it's still close enough to buy against 130, especially if you got a little red day today where it came back into 130. You could get long there. I think it's going to go up towards this measured move target, up towards 155, 160 if the market stays together. Lithium, set your alarm at 26. I like it long above that. Lithium has really been working. You can look at some of the other names. LIT is a lithium ETF. You've got LEU is a lithium ticker. You've got Albemarle. ALB is a lithium-centric company. And there was one more. Let me look. Oh, LAC, Lithium Americas, LAC, is another name you can track. All of them have been working. And actually, when you're looking in the non-ferrous metals, you can look at uranium as well. We kind of missed the move on that, but there's always other opportunities. And I think uranium is starting to feel it. So we can look for moves in the uranium space as well. And then last chart this morning, Square. Set your alarm at 275. Got a big trading range here. Had a false breakout here, but I think if Square can take out 275, I think you're going to see a fast move. Well, first to 290, but then to 300. Notice nice momentum signature, nice RSI signature. So set yourself an alarm there at 275. All right, getting back in the saddle. I forgot to mention today after the bell, we've got COUP, COUPA, Coupa Software, ticker COUP after the bell. We've got Path, and we've got Casey's convenience stores after the bell. I've been kind of watching that one as well. So if you're new to the channel, I hope you benefited and appreciated the content. I work really hard to give you good objective levels that you can shoot against, where you can get yourself a tight stop. And if we're wrong, we get a paper cut. If we're right, we've got good opportunity on the other side of the trade. Like I said earlier, jump over to the show notes, register for all my content, hit the subscribe button and the like on the YouTube channel. You get notified of all my content. And of course, longtime subscribers, I really appreciate you being here with me and supporting me on the channel. So have a good day of trading. Get ready for fall. Coming out of summer, get energized. I think it's going to be a good fall of trading. So we'll see how it goes. This has been Chris Buss with Trader's Profit Compass. Talk to you next time.